The S&P 500 is in a massive rising wedge. Rising wedges are extremely bearish patterns. In today's video, we're going to go over and see how much more room to the upside is there for the market. We're going to take a look at large tech stocks, the NASDAQ, the Russell 2000, which is getting a lot of love, crypto, Bitcoin-related names, as well as Forex and the VIX. Without further ado, let's get started with the video. All right, so first and foremost, this is the results from my Discord server where I share my day trades and my swing trades. As you can see, the proof is quite clearly right in front of you. Multiple different trades. Today we had 4 different trades. Not every trade works. Most of them do. So we had a 100% gain, a 70% gain, a 35% gain, and a minus 16% loss. All of these day trades are on same day expiration contracts. For swing trades, obviously they're much further out. We're currently already holding on to some swings. We're holding on to the longs from a few months ago. We just recently entered into the October and the November puts as well. But there's always money to be made. This is clear cut right in front of your eyes daily. So if you guys want access to the group, if you guys want access to my trading view indicator as well, that works across all asset classes, there's a 7-day free trial in the link down below. Go ahead and do that and join the best trading community on the internet. We are looking to create the best trading community on the internet. We already have tons of high quality traders all helping each other, whether we're new or experts. It is an amazing environment where we're all there to learn how to make money and make money with high quality trading ideas led by me and other members in the group. So if you guys want access, click the link in the bio or the description. We hope to see you guys there. All right, so currently the issue with the S&P 500 and the overall market is that we're at a major crossroad. A lot of tech stocks are looking bullish, and it's important to look at the large tech stocks because they determine market movement as a whole. They account for a large percentage of the overall stock market. So what they do determines the overall market. But currently, what we're seeing out of the S&P, what we're seeing with this rising wedge is a warning signal. This by no means is a time where you want to become aggressively bullish. And I'm going to continue saying it. I was very, very adamant that the market is not, I was not really adamant, but as the market touched this upper trend line here, guys, like I took profits on my calls. I'm only holding on to runners now. We took profits on our calls. We were holding on to longs on the S&P 500 for months. This spike above this trend line was an amazing opportunity to go long, to take profits on your longs. And what did I do in response to that? We took into some October puts. What did I end up doing on July 11th? We took November puts. So now we're holding on to October and November puts. In the short term, tech stocks do look somewhat decent. All right. It's not an automatic reason to be extremely bearish, but what we're seeing right now is it's setting up for great. We could get a bit of a rise up. We could see 64, 6,500 on the ES by all means. But all of these are good shorting opportunities, in my opinion. For the next week, 2 weeks, if the market rises, chops around, rises, falls, rises, all of these, in my opinion, are shorting opportunities. By no means do I think that the market is going to sustain this move. So look, this is what I don't think is going to happen. Okay? And I could be wrong. I do not think the market is going to hold these lows. I don't think that. Okay? Even if the market rises up and it starts to create a new sort of bull flag, right? This new bull flag that's going to be formed, if it does, right? This is going to end up breaking these lows, in my opinion. So regardless, I do not think 6250 on the ES should hold. I don't think it's going to hold. Even if we rise up to 64, 65, all of these are good shorting opportunities with a target to the downside of 61, at least a break of 6250. So even if we were to go up to 6450, 5% drop is to 61. So all of this on the table. October, November puts, really, really solid plays in my opinion. And it's really, really just not an amazing opportunity to start going long while we're at these multiple levels of resistance. I'm going to go ahead and explain a few more reasons why. We're going to take a look at the VIX. But first, let's take a deep breath and let's take a look at the large tech stocks first and foremost, okay? So number one is Apple. Apple is failed actually to hold above 210. So we know that 210 has been a major level of support for Apple. We broke below it. We were in a bull flag as well. We were bullish on Apple at 201. We rose up to 216. Is 216 a time to go long? No, you would rather wait for a bit of a pullback at levels of support. So we tried to hold this trend line, right? That was initially the bull flag's top level. That failed. So now that it failed, we got a quick move to the downside below 210. 208 is holding. If 208 fails, then we're seeing 205. Very simple. Apple doesn't look great. Okay. Amazon, however, is doing well, and it's still holding above the level of support. We were bullish on Amazon as well on this break of this bull flag as well, the upper level. We were bullish on Amazon around 213. We're at 225 now. We held 222. The next target for Amazon is 230. Amazon is continuing to look like one of the most bullish cases. All right. Tesla, interestingly enough, failed right where did I say it needed to break above? 320 to 323. What was today's high? 322.60. We were 40 cents away from 323, and we ended up closing below this 38.2% fib on Tesla as well. So Tesla doesn't look, it's more 50-50. I'm not very bullish, nor am I extremely bearish on Tesla. I'm more neutral. We took a look at Amazon. Google is also another one that looks really, really good. We could see that it's above 180. So the reason why, so we're just going to continue going down the list of these tech stocks. But the reason why we're going down the list is because we're looking at the Mag 7. These 7 stocks account for a large percentage of the S&P 500, a large percentage of the NASDAQ. So if majority of them look bullish, or if the majority of them look bearish, you have to assume that they're going to help pull the market down, or they're going to help push the market up. I hope that makes sense. So with Google, right? Google held 180. It came to this target at 182. I was bullish on Google. Above 183, we're going to see 190. Okay, so Google, Amazon, both look good. Netflix, however, is not yet looking too great. Okay, yes, we hit 1230. I was bearish on Netflix on this drop above this uptrend level, right? We had a huge uptrend on Netflix since down here in April. Multiple touches, right? Climbed and hugged this trend line for dear life. And then as soon as we broke down below it, we got a capitulation lower, 1230. So this 1230 level is major support on Netflix. I would not become bullish on Netflix until a break back above 1280. If we could break back above 1280, then sure, we could be bullish. But this uptrend breaking, I think foreshadows essentially what's going to end up happening with the NASDAQ as a whole. So Netflix bouncing, but it doesn't look bullish. Meta, also not the most bullish setup. It held 713. Spectacular. It was holding support. Oh, Hamid is holding support. This is not a bullish setup, in my opinion. Unless, we get some monstrous strength. This is a bull flag, right? But this is ugly, and we should be dropping to around 704, 705, in my opinion. We should get a retest of this lower level of this flag, in my opinion. It's difficult for us to rise off of this setup. It doesn't look great. Microsoft, however, does look great. It's clearly still within a massive uptrend since May, has been hugging this level. It is just clear as day, very, very strong. A lot of these tech stocks have been in massive uptrends, not breaking, except Netflix, right? So Microsoft looks great. And as long as it holds 497, if it breaks below 497, we could see a massive drop down lower in Microsoft. But looks bullish. Okay. So as a whole, for now, what we saw is a lot of these tech stocks looked good, or they're holding support, not showing extreme strength. All right. So a lot of these tech stocks, especially with NVIDIA right now, we're failing at highs, and it's tough to just be extremely bullish into all-time highs. That's the only issue. In AMD, same concept. AMD and NVIDIA were both red today. They're still holding support as a whole, right? But not extreme strength, which is the issue. Okay? So, the other main factor is this trend line that we saw. So, for example, we saw the trend line break on Netflix, right? We see Microsoft holding the trend line. But for the NASDAQ itself, the NASDAQ is also in an uptrend since May, right? The end of May. Hugging the trend line. Broke down below a bit, right? Hugging it. Fell down lower. So now we've broken down below this uptrend level. And a retest of this uptrend level, in my opinion, we could have it, but these are not long opportunities. If we get a break above, if we get to this uptrend level, and then if for somehow we end up breaking above the uptrend and start holding it as support, this would be just a massive blow off top. In the short term, yes, we will be day trading. We will be, leaning long and trading the direction, right? But for a longer term portfolio, for October, November, this is not the time where you really want to start going long, especially up here. Especially over here after we just initially started to show some bearishness. Over the weekend, Trump announced a 30% tariff on Europe and on Mexico. This is not the time to start becoming extremely bullish. We have these tech stocks are 50-50 in terms of their strength or their weakness. The NASDAQ broke below this monstrous uptrend. Yes, we held this level of support. Obviously, we held 22,800. No one is denying that we held this level of support. But this is so far up in the air in terms of just the sheer verticality of the price action. This is not a sustainable move in the long term. So even if we were to rise, all of these, similar to the ES, all of these moves to the upside, in my opinion, are good shorting opportunities. It would be just gambling. It would be gambling at this point if you were to be extremely bullish up here. So that, we took a look at all the large tech stocks. The Russell 2000, also one of the main winners, doing fantastic. We held the level of support at 2,200. It's not the best situation for the Russell. We're obviously holding 2,200. The Russell does look like they can see 2,300, right? By all means, but not a huge upside potential on the Russell. And then last but not least, we have to take a look at the VIX. The VIX is so important in today's market because it has an inverse relationship to the market, and the specific levels on the VIX have been working out phenomenally. Okay, so the VIX is important to look at because it has an inverse relationship. If the VIX is rising, that means the overall market should be falling. Okay, when the VIX is trading above $17, that starts to show bearishness in the overall stock market. So right now, the VIX gapped up. It's up 5% for the day. And we are holding above $17 with this candle. Okay? The more strength the VIX shows, and as we hold above this level of support, as it continues to rise, the SP500 is going to fall. So keep that in mind. The VIX being this strong is very, very important. And it's very important to look at. It's also very, very, very important to realize that VIX contracts expire on Wednesday. So this is a calendar of the VIX when contracts expire. All right. So we expire on Wednesday, July 16th. Generally, when the VIX contracts expire, there tends to be a reversal of the overall trend. We monitored this back in May and June. When the VIX contracts expire, there tends to be a bit of a pull. If the contracts are if the overall stock market is rising for a very long time, and VIX contracts expire, there tends to be a bit of a pullback. If the market is pulling back huge, and then VIX contracts are about to expire, there tends to be a bit of a bounce. So keep that in mind for Wednesday. Also keep in mind for July 18th on Friday, options contracts expire. So options as a whole, contracts expire on Friday, July 18th. So this week is very, very important according to options expiration and VIX contracts expiration as a whole. Wednesday, VIX contracts expire. Friday, options contracts expire as a whole. Very, very important. The market can continue rallying. We could show some strength heading into Friday, Thursday. By all means, great. But with both of these two things, I think the bullish headwinds are going to subside after these two dates. And then starting specifically maybe towards the end of this week or early next week, the market should be starting to show a lot more weakness. But of course, that's not a guarantee. But things are starting to pan out that way, in my opinion, based off of price action, based off of the S&P 500 rising wedge. You know, we can have another week and a half of rising, but in general, these are starting to show some cracks, and we should be getting a bit of a pullback. So, that's going to also affect crypto and Forex in general as well. Crypto obviously is doing very, very well. The overall market is going to just help pull the crypto market up. And with that being said, you know, there's not really much else to look at in terms of what's going to happen day to day. I'm excited. If you enjoyed this video, please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys tomorrow. Have an amazing day. Thank you. Take care.